Good afternoon, everybody. Welcome to MarketStream.live. This is the closing bell. My name is Joseph Cusick with the Cusick Group. Securities offered by MoneyBlock. And I want to, before I begin with the closing bell activity, thank this little dude. My 8-year-old son today, Pete, was on. We talked about what is his risk number. He has a goal of getting an iPad, and so we walked through, and I wanted to find out, how risk averse he was, whether he's willing to take on a ton of risk. Or if he wanted to take on very little risk. This is going to help him start to think about being an investor. And we had a lot of fun with it. And we're going to continue this journey. And hopefully you'll come along with us. And if you ever want to learn more about what Pete and I did today as far as going over the questionnaire, which took less than, with an 8-year-old, less than roughly 8 minutes of us going through the survey. And we got a risk number for Pete. So take an opportunity to reach out to me, jcusick at moneyblock.com. That's jcusick at moneyblock.com. Or you can get in touch with us at info at MarketStream.live. All right, folks, let's take a look at the closing bell action. And the major indices bounced back today after yesterday's drop, and then what looked to be a setup today for another precipitous drop. We saw that the market actually finished the day well off of its worst levels, right off of the highs. Dow was down 14 at 21,395. You had the S&P 500 down 5 at 24.32. What's impressive here, it bounced off of its 20-day moving average, finished on its highs. The bulls were tested in the short term, and they were able to bring back from the lows. Now, the NASDAQ, it broke through a couple days ago, actually earlier this week, the 20-day moving average. It's been challenging its 50-day. Early in the session, it opened up right at the 50-day moving average, broke through, but just could not sustain that downtrend. The bears have not been able to get the momentum. It was lighter than average volume today. We're also finishing the first half of the year, and across the board, you're seeing 8% on the S&P and the Dow Jones, and 14% for the NASDAQ going into the mid-year as far as performance. So this little pullback, natural, but the NASDAQ is the one that we're going to watch the closest going into tomorrow's expiration. And for those of you that had positions on in the spiders or the Qs, and we'll touch on that in a little bit, you could have some assignment risk if you were trading options revolved around that, because they all went ex-dividend. There was a whole bunch of them. The Russell 2000 been the best performing index for the last week or so, but has pulled back the last two sessions. It did finish off of its lows, well off its lows, which directly bounced off this 20-day moving average, which is this green line. That is where we found that the short-term bulls in the Russell 2000, this small cap, domestically centric, small business centric indice, it bounced and it held. And so the bulls are continuing to stay in control, but we'll watch that very closely since expiration is tomorrow. What has not been able to hold is crude oil. Now, I've mentioned this for the last couple of months, and the range has basically been between 42 to 44 up to as high as 54. If you actually look at the weekly chart, I looked at the base at more at the $44 level, and you can see this red line right here. It might be a little bit difficult to see, but this is 44 bucks right here. 44.36 to be exact, and we're right on it. That's where I think that support level is naturally, right around the $44 levels in the West Texas contract, the crude contract that we trade here in the United States, that we use to make byproducts like gasoline. The storage numbers are still historically high at a 5-year high. We're also seeing byproducts like gasoline. In other words, when we refine the crude oil that is pulled out of the ground here into gasoline, we saw those stocks, the storage numbers actually go up this week to 2.2 million barrel increase. That could potentially lower the price at the pump, but that's also telling us that the demand isn't there. Also, taking a look at the Brent contract that primarily comes from the Middle East, Russia, and so forth. You're seeing that that was down $1.72 today at 47. Of course, OPEC, specifically Saudi Arabia, Russia, trying to really just figure out how they're going to get the rhetoric going, because yes, they held the production cuts of 1.8 million barrels a day, but obviously adherence to that and the expectations of adherence to that, especially with the glut of oil that's on the market, the marketplace obviously isn't taking full credit on that, and they're also concerned about the fact that with the Fed coming out and unwinding the balance sheet, raising rates, could the consumer here in the U.S. as well as consumers around the world start to feel some pressure if there is inflation, but we're not seeing the growth. So we're going to watch the economic data. Gold today finished the day, and I'm actually going to change to a daily chart, through its 50-day moving average. The bears have started to take control here in gold. We're going to watch this one very closely. Now we're going to want to see if this continues to the downside. Next level of support is going to be right around this 1242, 1245 mark right here, 1243. That's the 200-day moving average. We'll see if that can actually hold if we get a further pullback. We did see that the U.S. dollar, if you actually put in the U.S. dollar, we'll type it in right now. I'm going to take a look at the dollar index. The U.S. dollar actually traded down at 96.92, but it was well off of its worst levels. That still couldn't catalyze gold, but gold did firm up into the end of the day as risk assets started to take a hit, because after the Fed was raising rates, and with that raise in rates came movement in bonds. It also helped pick up copper. Copper picked up, actually challenged its 20-day moving average and its 50-day, but still settled below. The bears are still in control there, but we're going to have to watch this industrial metal very closely. As I had said, the bonds pulled off, both on the short end of the curve, the 2-year, and the 10-year, and the 30-year, but not as bad as what was potentially expected, especially after we've seen such an enormous boost, especially in the long end of the curve on the 10-year and 30-year. And the one thing that's notable is, folks, is that while we're starting to see short-term interest rates, what the Fed has raised now to 1%, we are not seeing these longer-term interest rates. The 10-year, it's at 2.16%. It's actually down. Now, it did pop off of the lows. We actually saw a trade as low as today, 212, I think was the low of the day. 211 was the low of the day, 211.70. So we're seeing that bonds still are trading at just very low levels on the long end of the curve. And that is something that could be a little bit disconcerting as far as growth expectations going forward. Taking a look at the ETF so you can get an idea of what you can expect going into tomorrow's expiration. It is what they call quad witching. You have futures, options, single stock futures, and the rolls all occurring on expiration. So we're going from the June expiration cycle now to the front month, next front month, which would be September. That's why they call it the witching hour. So we have a new front month expiration. Now the diamonds right now, which are the ETF that track the S&P 500, clearly in a bullish trend. You can see that. They haven't challenged their 20-day moving average yet. Right now, basically trading at 213.69. For tomorrow, pricing in a 77-cent range in the $200 underlying. So you basically have less than 0.5% being priced in, about 0.4% being priced in for movement tomorrow, and you're seeing about a 1% move, $1.50, $1.60 being priced in for next week. Through next Friday. That's a range of either up or down that amount. For the spiders, take a look at the S&P 500. Again, challenged its 20-day moving average early, but bounced off. And we've seen that successfully bounce off over the last couple of weeks. You can expect that the range in the spiders is going to be about $1.22 tomorrow, so that's about 1%, and going into next week about $1.72, so a little over 1.5% being priced in either up or down for the spiders. Now do remember that the spiders are going to have a dividend of right around $1, $1.16, so the underlying will open down that amount, but all the options will be adjusted accordingly. Just want to FYI that so you don't start freaking out when you see that the underlying's down. It's because they went ex-dividend, and then when it goes ex-dividend, the underlying will go down by the amount of that dividend. In this case, it's right around $1.16. Now, taking a look at the QQQs, that's the NASDAQ ETF. Right now, they're pricing in the potential of an 87-cent move in this $139 underlying. So basically, you're looking at right around a 7% move for tomorrow, either up or down, being priced in, and 229 for going into the end of next week. So you almost see, you know, right now about a 15% move being priced in to the Qs. Now, this isn't unexpected when you see the implied volatility rank is at 52. And for those of you that don't know what implied volatility is or implied volatility rank, that's an expectation of violent moves or moves. Volatility is a gauge that is utilized to build an expectation of potential future movement. And so when we rank it between 0 and 100, 0 being not a high expectation or no expectation of big violent moves, and 100 saying that there's a huge expectation, we're in the middle of that range. So there's a heightened sense right now of still some moves. And guess what? It's between its 20 and 50-day moving average. It's right in the middle. And so as we have noted, this is a battleground. So it's not all that unexpected to have volatility in tech. I mean, you've seen Facebook, Apple, Amazon, Netflix, Google, Microsoft. All the biggies have come under pressure this week, and so that has put some pressure on the NASDAQ, and it did finish today above its 50-day moving average. But again, watch this one closely. Has about a 1.5, almost a decent range being built in, 1.5 to 2% range being built in for next week. Let's watch that one very closely. Taking a look at the small caps, and what's notable is in the Qs and in the Russell, the NASDAQ and the Russell, full disclosure, I do have positions on for my clients. Now, the IWM down 72 cents, pricing in, it's going into tomorrow an 81-cent move. We'll see if that still holds up overnight. Trading at 140, so you basically have about a 0.6% range for tomorrow for IWM, and a 212 range, $2.12 either up or down. So you could see it at 142, or you could see it at 138, somewhere in that range. That's what's being priced in next week. Now that could expand or contract based on what goes on, both at expiration and whatever else goes on, either economically or geopolitically. Taking a look at the bonds, we take a look at TLT. That's a hybrid of the 10-year and the 30-year bond. They call it the 20-year hybrid. The TLT tracks bond prices, not yields, but prices. So as prices and the bonds go up or down, TLT goes up or down. TLT was down 20 cents. Bond prices were down today. Trading at 126, right now they have a 39-cent range being priced in for tomorrow, which in context is basically about 0.3%. And they also have about $1.20, so about a 1% move being priced in going into end of next week. So you could see it as high as 127 and some change, or as low as 124.80. So we'll watch that one real closely on TLT. And then finally in the precious metal space, gold. As we had mentioned, gold had come off. The bears have taken in control. You can see that GLD, which is the proxy ETF for gold, finished below its 50-day moving average today. It challenged it yesterday and stayed above, but the battle is now being won by the bears in gold. Understandable, since some of the risk factors as far as interest rates and the FOMC, the UK elections, and so on and also taking a look at some of the data that's come out of China that's been very positive. Gold has lost a little luster. GLD is pricing in a 41-cent range tomorrow on this $119 underlying. So you're basically looking at a little less than around 0.4%. And you're looking at $1.49 going into the end of next week. So you're seeing a little over 1%, probably 1.2% going into next week as far as range either up or down. So you could see gold challenging 120 and some change, or getting into that 117 and some change. So we'll watch that very closely. Support's going to come in, as a matter of fact, at the 200-day moving average at 118.40. So watch that. They're pricing in the potential for it to touch there. And upside resistance comes in at the 50-day moving average on gold at 119.63, which is priced into the range right now. And the next level then is at 120. So again, we're seeing that they are pricing in the potential next week of challenging these support and resistance levels in gold. So we'll watch that one very closely. All right, folks, that is it for the closing bell. I will be back tomorrow morning, and maybe we'll have another secret fun guest. All right, so folks, thanks for watching, and we'll see you here live tomorrow morning starting at 7:45. All right, we'll be here Central Time, 8:45 Eastern, or 8:30, excuse me, 7:30 Central, 8:30 Eastern. We'll be on live. We're going to be talking Asia. Then at 8:45 Eastern, we'll be talking Europe. And then 9:30 Eastern, we will be talking everything that's going on in the U.S. And then join us for 1:30, where we'll have Strategy Now. My buddy Pete, the little man, 8 years old, probably sat down and did something that 99% of you out there have never done in your life. And you have somebody else just managing all your assets, and they have no idea what your risk tolerance is, what your true objectives are, who you really are as an investor. Well, I know what my 8-year-old son is right now based on how he answered this. Go watch this and then come back to me if you ever need any help. All right, we'll talk to you later. Take care and have a great night.